SMEs is another segment that we focus on. We're also focused on digital providers like banks as a segment. So they use our APIs to launch digital bank assurance. Right now we have 2 banks using our platform and API, including KCB, which is the biggest bank in East Africa. So they're launching in the next coming weeks using our API. So some of the key learnings I would say is that, for example, with channel partners, which is our B2B2C segment, although you might plug into what you'd assume is the right platform, I mean, they might have millions of users or millions of customers or hundreds of thousands of customers, the products don't sell themselves. So that was a very difficult learning for us because, we thought that we're able to contextualize the product, we're able to plug it in the right place, and we thought, okay, maybe at that point in time, we'd be able to ensure that people are actually purchasing the product. So right now, we're looking at better ways to market. So we're testing a lot of different marketing techniques to be able to ensure that we're actually reaching the goal of onboarding some of those end customers within those platforms. And I think one of the key difficulties is that because we're a white label solution, nobody really sees us. So although we're plugging into these platforms, you're really leveraging the other platform that you're using. So whether that's a bank, whether that's a digital platform, you're really leveraging on that. So being able to see what's the right recipe for marketing to be able to successfully enter into the user experience, the user journey, and actually ensure that uptake has been quite an interesting learning. Another thing is that although everybody talks about digital insurance, everybody's talking about, being tech savvy, a lot of the time, you go into some of even the most well-known digital platforms. However, you're not able to integrate because they have backlog of like 50 different integrations that they're working on. They have like their own components that they're trying to build out. So one of the things that we were trying to do was understand, like, how do we ensure that we're still able to plug into those platforms? How do we jump the queue, to the top of the queue so that we're the first ones to integrate? So some of the different things that we tested out on that is making our APIs less code, like no code or low code solutions. So that's one of the things that we're working on currently. But we also launched an opt-in, something that we call the opt-in flow. So this is basically any business is able to use our technology to launch this flow, and it's a B2B2C flow. So what happens is that whether you're any kind of company, you don't have to be a digital company, you're able to create the product and launch the flow and then send that flow to any of your user base. So they're able to now actually go through the purchase journey. And I think that was a very interesting approach that we came up with, because it sort of helped us tap into not only the digital savvy customer base, but also more traditional companies that still have an insurance need, but are not able to actually, effectively serve their customer base with the right kind of insurance products. So I think the next thing I'll maybe show you is a demo of the opt-in flow, and then I'll leave it to the next person to deal with the technical difficulties. We shared the video, right? For the demo? Okay. These screens look fine. Okay. Sorry, do you mind starting it from the beginning? So, okay. Okay, great. So here you can actually see the first step, which is basically you're able to create a product. Do you mind just pressing pause on each of the screens so that I can explain? So yeah, it's a tough one today. Okay, so this is the first, basically the opt-in flow. So here you're actually able to create the product for any customer base. So this is one of our partners, Travelport. They wanted to sell motor insurance products through their user base. So you're able to create, and then it makes a custom URL, custom flow based on the product that you want. So the second step is essentially the purchase flow. We wanted it to be seamless when you're creating an account. So actually, although you put in your details and everything, you don't have to set up password or anything. The password is automatically sent to you so that it's invisible to you as a user. And then here you're able to select what kind of product. You can actually program this for any kind of product. So it can be a medical product, any kind of product that you essentially would like to launch. You're able to program it through our product creation platform. So this is just the steps for the motor insurance. So here, you fill in the details that you have. And then it'll start to give you options. So here you, as a business like the Travelport, they selected different underwriters that they wanted to offer and different products that they wanted to offer. So you're able to actually see those exact products and go through the rest of the purchase flow. So after this, you'll actually buy the product. You can pay by M-Pesa and by card. And then you will receive your policy information and policy documents. You can also come back into the platform and log in with the details that we sent to you, to your email, and then you can also file a claim in the same platform. So this is a way that we saw was a simple way to actually circumvent the issue of integrations, so that you're able to actually launch a lot of these products very easily. Another fun fact about this is that it also helps a lot of brokers. So brokers or agents that are maybe smaller scale, they want a way to sell more products quicker. They're able to use this flow and launch it with their product suite that they have. Thank you.
Thank you, Jihan. The brief we didn't get was that you'd come here to demonstrate the bumps along the way to achieving digital solutions. But that was an added lesson. Digital delivers excellent customer experience, but along the way and behind the scenes, it's pretty rough sometimes. So digital is not always smooth. But thank you very much. I think we are resilient. Yeah, nothing stops us. I hope you're remembering the panelists, because you'll need to use their names as you ask them questions. The issues that Jihan has talked about are common to anyone trying to do digital products. So great solutions, but you need great support. And a lot of the times it depends on how ready the partner on the other side is. If the partner is not ready, you'll have a rough time. Thank you very much. I know questions are coming up. I can see questions in people's faces, but we are going to hold them just a little bit. I'd like us to move to Ayo, and that is Andrew. Thank you.
Thank you, and good morning, everyone. If my voice is hoarse, please forgive me. I was singing last night, as you can tell from the attire. Okay, thank you very much. So I got a lot of questions from the first presentation I did on Monday around who we are, how we are structured. So Ayo is, I would say, the birth child of MTN Mobile Network Company about 6-7 years ago, where within their vision of providing financial services and obviously financial inclusion across the African continent through their footprint, they decided to create a standalone insurance vehicle through which all players, stakeholders, insurers, brokers, intermediaries alike could basically plug in and obviously access their platform to spread their services. In so doing, they decided to partner at the time with Metropolitan Momentum Holdings out of South Africa. That JV has since transitioned to include Sanlam, so it's a 50-50 JV between MTN and Sanlam. Just to give you more context, again, obviously a lot of people who have dealt with telcos, I think the main complaint is the lack of attention, the lack of understanding where insurance services are concerned, etc. So in this case, MTN, long and short, decided to step away and create an actual entity they have stake in, through which all stakeholders or all interested businesses around insurance can plug into and collaborate with without any difficulty. The core leveraging, obviously, between the two sides from an insurer and telco side is obviously, first and foremost, from a telco perspective, we obviously have the platform, the reach, the distribution channels that include mobile money, as well as GSM, and the market knowledge. Everybody would tell you that telcos are pretty much the experts at delivering products digitally to people, and fast for that matter. I think there are very few other areas or sectors that do it better than them. They're literally everywhere at once, at the same time. Insurers, on the other hand, provide obviously the insurance financial aptitude, which includes the actual licensing, products, expertise, and also policy administrative systems. This is the cross-pollination that we have been privileged to leverage off of. So I think on the top half there, you're talking about the telco in terms of the customer data, the local insights, data insights, market support, very important, as well as premiums and claims facilitation, and most recently, KYC information. In Zambia particularly, and I think it's very common across the continent, for you to have a SIM card or own a phone, you obviously need to provide some form of KYC to the provider that is giving you that service. In essence, telcos have become, I think, even more efficient than banks when it comes to collection of KYCs in many of these KYC in many of these markets, making it a one-stop shop for the basic information that you need for a customer, where they live, their agenda, etc. National IDs where they're applicable. On the bottom half, of course, you have the insurance contribution. Like I said, also very important. Licensing, product, policy administration services, like I said earlier. And then, of course, in the middle is the coming together of all that. So where IO is concerned, we have a cross-pollination of people as well. So we have people with expertise in the insurance field and expertise, of course, in the telco sector. And with time, this cross-pollination hopefully will create one expert, if you like. So what you see in front of you is one of the core areas of what we are trying to do in this space from a digital perspective, as well as conceptually, trying to win hearts and minds. So this was in Zambia, and I think the body language of the lady being spoken to or educated about our product and insurance generally speaks to what we're talking about. I'm sure we all see some level of doubt, isn't it? Just from her body language. What is this? Is this real? How is it on the phone? We can all see that, right? But she's equally interested, curious. Okay? So I just included this for context as we go along. So this is basically what she's seeing in essence. So what we have done is try to tangibilize insurance. Now, the greatest tangible way of tangibilizing insurance is obviously by claims, right? Claim settlement, quick, fast, swift. But what happens when somebody doesn't have a claim or hasn't claimed yet? They become disinterested, maybe even despondent. They forget. Right? I know the traditional insurance, I gave the example a few days ago that typically we'll sign up for the policy today, and literally years, months even, many years will pass by, and then we make a claim. We don't even remember what we signed up for. We don't even remember the benefit. So in terms of tangibilization, we have brought this information to the customer's phone. So on the right-hand side is basically a screen grab that shows the customer's actual insurance value in terms of benefit at a particular point in time. So in this particular case, in terms of Zambian Kwacha, this customer had earned or purchased cover up to the value of 1,900 Kwacha. In dollar terms, I think that should be, I don't know. Anyway, so that's value that the customer can see immediately, and that cover is obviously for hospital cash or hospital cover in case of admission for either accidental injury or illness. Also equally importantly, based on the capabilities of the telco platform, is on the left-hand side, where you can see particularly what we try to keep insurance top of mind with the customer. So those are just some of the messages that we have come, sorry if I may, just because it's flashing here. Some of the messages that we have come to actually create with our interaction with customers. We try to also find out from them, because generally SMSs can be quite heavy and boring, and everybody's sending you SMSs, your landlord, so we tried to engage with customers to say, what kind of information would you like in terms of content from an insurer or financial service provider? So we came up with some of these messages. Some of them, the first one I think is a call to action for one of our products, Family Cover. It's a live product. Sign up for your MTN IO Family Cover. We've included the MTN brand there just to add confidence and trust. Very simple step. Dial *296#. It's a USSD code. And then obviously you follow the easy prompts, round about 4 or 5 prompts to sign up and also get information about the product. The other one just below that speaks to engagement around claims. So we're very heavy on actually educating customers on how to claim. So that particular message is basically telling the customer what to do when they have any difficulty when lodging a claim, because it's all also done through the USSD, as you will see later. The other one obviously is a call to action. We in Zambia, and I think across most of the markets, are probably the only intermediary, or I would say player in the insurance space, that actually sends reminders to customers to make a claim at least once a month if they have obviously experienced the event. So we are very particular about that, and in some cases we've even gotten in trouble with the telco regulator. You keep bombarding people with SMSs to claim. Why are you doing that? They say, well, because we want them to benefit. We want to keep reminding them that they have these products, and if they have been in hospital in the past 30 days, as an example, and they have the necessary documentation, please dial *296# and follow these prompts and send us your claim so we can pay you that lump sum benefit into your mobile money account. Simple as that. And we keep doing it once a month to each customer all the time. What's next now is just some it's a video to provide context around what we believe is the customer value proposition linked to obviously digitization and obviously operating efficiency for the business. I think we've cracked the distribution side from a digital perspective through telcos, and IO was not the first. I think there have been many entities or enterprises across Africa that have successfully managed to get customers to enroll. And it's been, that ability has been there for some time. What I want to show you now is basically what other value proposition, and I think the key ones that we need to explore as insurers or intermediaries in terms of customer value proposition. So the enrollment, the policy administration, the marketing is just the first aspect. The most important thing is what happens after that. How do we use this technology and emerging technology to more efficiently pay claims, to more efficiently service customers, to more efficiently educate them? So if the technical guys can assist, I struggled from playing from this end the last time. Please go ahead to start the video, and then I'll try and speak to it. Sorry, there's no music in the background, but I'll try and hum as it's going along, just in case it's too boring. Okay, please go ahead and play. Yeah, it's embedded, so there should be. Okay, or maybe you need to, from presentation. So as I was saying, digital is digital. We can distribute, we can reach customers. Accessibility, I think we all know, especially through the telcos, that has been cracked and cracked a long time ago. So the next iteration is on what else can we do to create value to customers and to get more people under the umbrella of insurance and the benefits that, that go with it. As we can see, technology has its own challenges, and the telco collaboration is not immune to it. We deal with connectivity. So in areas where there is no network or poor network, we unfortunately can't efficiently service our customers. That said though, like in Zambia, there has been a particular investment in terms of tower distribution in rural areas to allow greater access. I think the flagship in Africa should be Rwanda, if I'm not mistaken, Emmanuel, where the government there has deliberately taken infrastructure in the telco arena and accessibility fairly important or significant, just so that services such as these are not inhibited by way of connectivity. And the telcos themselves have been obviously investing accordingly, but that's one of the downsides. The other downside, of course, in terms of challenges, in as much as we have vested telco interest, from a customer servicing perspective, as IO, we have decided obviously to take ownership of the customer. With time, we are hopeful that the telco windows in terms of servicing will mature and be able to service customers accordingly, and obviously learn enough about inclusive and or any insurance to provide those technical, that technical support. In terms of why we are successful in the collaboration, I think it's a no-brainer. The telco itself has a vested interest. We heard from the Pioneer example on Monday, where even in their case, they went into a JV between themselves, and I think it's a credit or loan company. So the insurer and this entity set up a JV just to provide inclusive or microinsurance services to a specific cohort. So even our model basically replicates that. It's a telco this time and an insurer. But what also reinforces that is that from a stakeholder perspective, at governance or board level, for IO, the Group MTN CEO, Ralph Mupita, is the board chair for IO Holdings. And his vice chair, or the vice chair of that board, is the group chief executive for Sanlam. So these, at that level, are already invested. And as such, as an example in Zambia, our board chair for IO Zambia is the MTN in-country CEO. What does that mean? It means he or she has an immediate KPI that actually speaks to inclusive insurance that they need to support. So as you're thinking of your partnerships and JVs, it's very important that you also consider the option of actual entities as or setting up standalone or separate companies. They don't always require monetary investment or capitalization. In our case, in the beginning, MTN were, I think, financially, in terms of money, providing that side of the capital. The insurer came in with the policy underwriting services, technology, and of course, to a certain degree, product and people as well. So there are ways of actually equitizing, if ever such a word exists, without money. So here in, I had discussions yesterday here in Kenya. Everybody's talking about Safaricom being this big monster who does not speak to anybody when they don't want to. But in line with that, one of the options obviously is potentially engaging in such a way that you have standalones where they have some form of equity that may not involve capital. Are we ready? Okay, all right. No, that's fine. Okay, so what I was going to show you, obviously, was basically an end-to-end claims administration process. Um, I picked claims because, like I mentioned, I feel we have cracked to a certain degree the distribution side. But particularly what we've been able to do without reinventing the wheel is leverage off of existing technologies such as WhatsApp. Some of you in your business areas are already using that already. And what we are using that for, obviously, is to allow for customers to share their hospital documentation. We have also built in a background that a support system that is able to digitally analyze the documents that are submitted for authenticity. And then obviously, beyond that, an assessor picks that up and instantly does the final part. Our end game is basically to have full AI capability where claim servicing is concerned. So what is AI for those who don't know? It's artificial intelligence where there is literally no human intervention. Our dream as IO is that when a customer lodges their claim digitally, it should be paid instantly or redeemed instantly into their mobile money wallet without any ado. So how are we doing this? We're teaching our platforms to learn basic behavior, most importantly to pay as many claims as possible, and what makes the tenets of those claims. Very little underwriting, very few boxes to tick, but also leverage off of the general behavior of the consumer as a way of judging and making a call on claims disbursement. We believe in the next 5, at the most 10 years, this technology will be available, not just by us, by a lot of people, and it will be a real game changer in terms of fulfilling the promise and creating greater trust. So I immediately log onto my phone and then obviously submit my claim, and then even without documentation being submitted, the system should be able to make an intelligent decision as to the likelihood as to whether this claim is payable and is truthful. It's also helping us with fraud detection for now, but I think the most important thing is that it assists us to pay claims almost like a conveyor belt. And the more people get paid, the more people get trust with insurance. Thank you very much. The video will be shared, I think, separately, but I think it's very important when in your own time that you take a look to see it in real action. Thank you. Thank you. Asante sana. Karibu.
Thank you,
Jambo.
Andrew. Thank you, Andrew. I think you've also shown us that digital is not everything. When it fails, life continues. But it is important. It makes life much better. I think we will proceed to the last presenter and then we open it up. So get the questions ready. And Siani, if digital doesn't work there, it will work here.
Okay, so.
We always create options. Right. Thank you.
Okay, thanks, Chairman. Good morning, everybody. It's a pleasure to be here. Thank you so much for the invitation by IRA to present a bit about what we do and how we make in technology provide more efficiencies. My name is Siani Malama. I'm originally from Zambia. I'm based in Nairobi, Kenya. My previous colleagues at APA have tried to give me a Kenyan name. I'm still waiting for it. So hopefully it will come through. Just to talk about a bit about Democrans, so I look after Sub-Saharan Africa region. Democrans was started in 2015, and at the heart of it was really around doing microinsurance, where the founder, Michele Crosso, through his corporate career, with a passion of microinsurance, trying to get microinsurance into the hands of millions of customers, and really was the birth of Democrats. I'll talk about what we do in terms of how we enable technology, the benefits and challenges of technology. As you can see, technology always doesn't go our way, but we try and make the best out of it. Sorry, do you mind just moving to the next slide? Because I can't. Let's try that. Okay. Just a bit about Democrats, just to give a bit of context. We are a B2B partner, so we mainly partner with insurance companies to enable them to launch new products, new channels, and really making use of technology to ensure efficiencies and delivery of products. We're currently live in about 16 markets. From an Africa context, we have presence in Egypt, Morocco, and we've got projects in the pipeline, about to go live in Senegal, one in Kenya, and about to go live in Ghana. We've got a couple of other markets that we're trying to secure for 2023, really just to emphasize our expansion growth for Sub-Saharan Africa. So we administer close to about 50 million policies that we process through the platform. We're very product agnostic in that we cater across different products, different customer segments, but for the purpose of today's session, I'll limit it to the low-income customer segment. As you can see, one of the product solutions there that we're very, very passionate about is microinsurance and how we bring technology to deliver microinsurance solutions. So I'm trying to multitask and move. Okay, great, it's moving. And how do we do this? So our technology is really is a white-labeled platform, and we leverage of three key pillars. So on the left-hand side, what we try and do is to really reduce the cost of distribution. We all know, especially in microinsurance, that distribution is literally king. If you don't get distribution right, chances of that microinsurance program to succeed are very, very low. So through our technology, our focus is how can we bring the insurance processes, how can we bring more efficiencies to that delivery channel by using technology to lower the cost of distribution. Through third-party connectivity, I think, like my colleague Ajay had mentioned earlier on, we really leverage off around plugging in into other platforms, into digital platforms. But one of the biggest challenges that we see, or we come across, especially within the insurance space, is legacy systems that do not have integration capabilities, which brings us on other challenges. But that's one of the key areas that we look at is integrating into unconventional platforms or unconventional distribution channels. And by that, we're literally leveraging off the data. As we all know, data is becoming a very, very powerful tool in business decision, in business modeling, and really ensuring that the use of data provides efficiencies that is required. Why is microinsurance or inclusive insurance? I think nowadays it's used interchangeably. Why is it so difficult? What has worked? What has not worked? From our experience, what we see, especially from the demand side, is we see a huge barrier in terms of trust. I think this has come up as one of the barriers during the entire conference. From a customer perspective, we see a huge lack of trust, lack of awareness. In my personal opinion, I think the industry and especially insurance companies are not investing enough in terms of consumer education and awareness of the benefits of insurance. I have this passion around why we've been calling it insurance. I don't think we should even call it insurance, right? Because the minute you bring the word insurance, you've already lost the customer. I think we need to be selling solutions as opposed to selling insurance. Customer journeys are too complicated. There's still a lot of paperwork that is required. Again, this brings challenges. How are we going to reach customers in the remote parts of many countries with such complicated customer journeys? In microinsurance, I think one of the biggest challenges as well is collection of premium. As you know, these are low ticket premiums. How are we going to efficiently collect premiums and make it still sustainable and profitable? We know the microinsurance has got a very, very low margins, collection of premiums where most of the customers that we're dealing with or that we're engaging with, majority do not have bank accounts. So how do we collect those premiums? And really looking at alternative ways of collecting premiums through financial solutions that customers are already engaging with, right? And that's how really technology can come into that space to help solve some of these challenges. On the supply side, Still, there's still a lot of traditional distribution channels being used. We know from from a lot of case studies, traditional channels are a huge challenge for microinsurance. We need alternative, new, innovative distribution channels. We've seen a lot of innovation around distribution. My colleague Andrew has obviously spoken about what IO is doing in terms of distributing through telcos. So those are some of the interesting channels that we're seeing. And often, when we engage with our partners or strategic partners within the space, we also see a bit of challenge in terms of insurers trying to struggle to understand this customer segment. I think somebody earlier on mentioned around how there's still too much focus on the upper end of the customer segment, and insurers are brilliant at that, but there's still this need of investing in understanding this customer segment. And thirdly is around technology and the challenges with some of the systems that we come across. From a digital inclusive insurance perspective, it's all interesting, it's all great, but you also need to share a bit in terms of what has worked, what is not working, how have we gone about it as Democrats to try and bridge the protection gap. And one of the key areas, I love this photo on the right-hand side. This was during a focus group in Senegal. One thing that I need to learn French because I struggle to follow the conversation. But we really design around the customer, right? Technology is great. Technology is not the silver bullet. You have to design and position your technology to address what you're trying to solve for. And you have to understand how the end user is trying to use or is going to use that technology to enable efficiencies and distribution. So we really center the design around the customer. Right? We'll try to understand the customer pain points from a product perspective, even from a technology aspect, is how are you going to distribute that product using technology? How is technology going to play a key role in there? So the customer focus really sits at the core of any microinsurance program that we design or get involved in. And this is really centered around technology as an enabler, as I mentioned earlier on. It's not the silver bullet. There's so many moving pieces to make sure that the product is delivered correctly. The program is sustainable, both from a client perspective and also from an economic perspective, right? Because it has to be sustainable. It has to make economic sense for the program to be sustainable. So technology is definitely an enabler, but it's not a one size, or it's not a one silver bullet. We've definitely focused on customer value. I think Catherine from the main shared around the landscape of microinsurance the other day. And for me, one of the things that really struck me is the maiden claims ratio across, I think, 935 products, if I'm not mistaken, is at 22%. Right, and I personally, I have a challenge with that, and I'm going to challenge the industry, because a claims ratio at 22%, where is the customer value? What are we doing? How are these products being designed? How are they being created? Right? I'm always fostering, I hope I don't get shut down by insurers here, but a claims ratio, especially in the space of less than 50%, for me, it speaks a lot about around the product, around where's the customer value, and are we really putting out products in the market that are providing customer value. I love what IO is doing, Andrew, where he's sending SMSs to clients to encourage them to claim. Because I personally believe that insurance companies are not in the business to underwrite policies, but they're actually in the business to pay claims. That's what makes the industry drive. Speaking about product innovation, and then the last is really around build, measure, and learn. It's like a washing machine for me. Like, right, you have to go there, you have to build, you have to learn, tweak it, make changes, and make sure that it's a continuous evolving cycle. In terms of our microinsurance journey, as I mentioned, the company has been around for 8 years now. And what has worked? There's some things have worked, some things have not worked. In terms of what have worked, we have managed to achieve 1 million customers in terms of low-income customers that we currently manage or process through our platform. And this is through, obviously, partnerships. Partnerships are very, very, very key in the delivery of any microinsurance programs. Really around innovation, where we innovate in terms of delivery, in terms of product design. One of the key areas is really bringing around efficiencies. We've got a partner that we work with in Egypt that distributes the microinsurance products through microfinance institutions. Before we partnered with them, I don't know is anybody from Egypt or who's been to Egypt, but there's a huge untapped market in Egypt in terms of low-income customers, right? But it's very, very traditional in that people still use a lot of paperwork. There's still that manual processes. There's still that human intervention required, which is great. But what we've done is on this program, we've actually managed to reduce, just as an example, to reduce the claims turnaround from 3 weeks to literally about 1 or 2 days, where claims are being paid that fast. And claims payment is really where the heart of microinsurance is. If you're gonna take long to pay claims, you're gonna lose that client, right? So it's really bringing around efficiencies and reducing costs for the distribution partner and for our insurer partners. Through this is we do it by enabling our partners to sell more insurance or microinsurance companies, microinsurance policies. And how do we do this? We do it mainly centered around four key pillars. One is very simple customer journeys. This customer journeys have to be simple. It has to be very convenient for clients. And this again speaks to the product design, is how simple are the products, right? Through Product Builder, where literally you can build your own product. And we've seen, actually we're starting to see a more and more trend in this space where customers themselves want to build their own insurance products. So, and it's shifting where, in the olden days, is insurance companies, they design a product and take it to market. But now customers are saying, like, guys, this is not what we want. We want such and such a product, right? So really enabling the customers to build their own product. It's crazy, but it's fascinating. It's really things that we're seeing happening across the industry. Through API connectivity, I think I spoke about that. Jihan has also spoken about the importance of API connectivity and how we can connect into various platforms for administration and distribution. Lastly, but not reporting and analytics. Again, this is where we can really understand customer behavior, look at some of the challenges within the customers, and how we can use this data to improve most of the efficiencies that we're trying to solve for. So the role of technology really plays a key enabler across the value chain, across the insurance value chain, from customer awareness or customer acquisition to product development, all the way through distribution, administration, and customer retention. But one of the key things for me that is also quite key is on the last pillar is really around value-added services, right, or additional services. The unfortunate thing with insurance is you only get to benefit when something bad happens, right? And that's, for this customer segment, they don't understand why they need to part away with $1 today, and hopefully when something bad happens, then they get something back. They're like, no, you guys are stealing my money. That's why they call us thieves in the industry. That's realistic. But I think if we added a bit more tangibility with the products that we provide, with the value-added services, it makes it much easier to bridge that trust between customers, because customers want immediate gratification. They want if I part away with $1 or 100 shillings today, I want to make sure that I get something back immediately from that 100 shillings. Where's the future going to? Where are the opportunities? What are the enablers? What are the drivers? From our perspective and from our experience and from what we're seeing globally, sort of like summarize it under And the 4 key pillars, it's a digitalization, so definitely digitization is one of the key drivers. But digitization is alone or in isolation is not the silver bullet. Yes, insurers would definitely need to adopt a higher level of innovation and higher level of digitization. And digitization comes in all different forms and sizes. You really need to understand what is your digital strategy and how you're going to execute that delivery of the strategy. We've seen a lot of, within the insurance ecosystem, around the Internet of Things, around AI. So much is happening in that space, especially in the health and the motor space, where technology is really being used as a key driver to better underwrite risks, to better understand clients, and to price properly. And one of the key areas or one of the key barriers or challenges within this space is really around pricing and pricing correctly for products. Analytics and data science is a key thing. Artificial intelligence is key. We've seen a lot of AI being used. I don't need to talk much about AI. I think everybody is well aware of that. But what's interesting as well is in 2021, we saw an investment of about 3.6 billion. This is global figures of insurers investing into this space, into analytics and into data science and into artificial intelligence. So it just shows you sort of where the direction is going. And we need to catch up, and especially from an Africa perspective, from an Africa continent, we definitely need to catch up in terms of making use of data and AI. We've seen a lot of personalization in terms of insurance solutions. Customers who want more personalized solutions. They don't want insurance products, they want solutions, right? It's how do we provide those solutions? How do we provide a financial solution? Why should we call it insurance? Let's not call it insurance. Provide a solution. And we're seeing a lot more of that personalization going forward. I'm just going to end on this slide. I came across when I was doing a bit of research on this topic, and it's quite interesting when you look at AI. I think, when we talk about AI and we talk about technology, we all get nervous to say, is AI taking over? What's happening? And there's a lot that's happening within the AI space. Courtesy of Swiss Re, this slide for me is really, really quite critical. If you look at the various pillars within the insurance value chain and where AI is going to impact heavily, but also where the opportunities remain, right? If you look at product management, and as an example, you can see there's still so much opportunity where AI may not have a bigger impact. There's definitely areas where it will have an impact, a great impact, but at the same time, there's still a lot of opportunity. So the challenge is not to run away from it, but the challenge is really to embrace it. Is how do you embrace it? How do you embrace it into business models going forward? That's the last of my slides. I hope that the presentation was helpful and shared a bit more about what we're doing. I hope the technology will not fail us with I've got a video. I don't know if it will play. If it will play, please put it up. But for me, this video really emphasizes on a couple of things. It emphasizes one, on the beauty and power of partnerships, and how important it is to have partnerships, strategic partnerships. We cannot close the protection gap in isolation. We definitely need key partners. We definitely need innovation. Innovation is very, very key in addressing some of these challenges. So I think the video is playing now.
Every year, over 200 million migrants around the world send in excess of $500 billion to their families back home in developing countries. These funds guarantee access to basic daily needs such as health services and education, and the hope of a better future for their children. The current health crisis and its impact on employment and reduction in remittances has not only confirmed the crucial importance of these flows, but also highlighted their vulnerability. But the realities of these migrant workers are not measured in the millions being sent around the world, but on the $300 being sent home on a regular basis.
I'm Marvin Lutaya. I'm from Uganda. The funds that I sent back home, I used to pay for my sister's education. They're all under me, so I have to fund their education as well. I have a sick mom, and my dad is getting old, so that's a lot of responsibility to me as well. Due to this pandemic, no one knows what will happen. But the fact that I've got insurance with me, I'm at ease. I'm at peace. Life moves on smoothly. I will definitely come back to use Hello Pesa to send money back home, because definitely in 15 minutes they have the money. By the click of their hand, they have the money on their mobile phone. So it's easy for me, and I love their services. I want my family to stay strong. Due to this pandemic we're in, I'll do everything I can in my possible ways to send them back money, to keep them funded, to keep them going on. They'll be having a better life, they'll be happy, and I'll also be happy when they're happy, and I'm fine. I want them to be fine.
Marvin is not alone in his worry. According to a study in 2018 made in the UAE, not being able to send money back home was the most cited concern among the participants. Simple insurance products such as personal accident, life, healthcare can alleviate easily this concern. However, the problem is not the insurance product, but the ability to educate and engage with the clients during the distribution of them. Today, our partners, RISE and Hello Paisa, are playing a very important role on this. Educating the clients on the benefits of having this type of insurance is key. During these difficult times, we have also added the teleconsultation as a benefit, so that our insurers can receive medical consultation from their homes by just using their mobile phones.
My name is Laarni. I'm very happy that I'm covered by this insurance, especially this is happening right now, like we have the coronavirus, these uncertain times. We don't know what's going to happen to us. So it's very important we're sending regularly money to the Philippines to our loved ones. I would like to tell for my two boys that they don't have to worry about me here. I'm safe, I'm protected with the insurance. So I'll be sending regularly money to them. Subscribing is so easy. It's just in the mobile application, and I'll definitely gonna buy this one for my family back home.
Looking at ways to overcome these barriers, IFAD extended a grant to ADA, an inclusive finance NGO that partnered with Demogrants to provide insurance to migrants in the Gulf and their families back home via remittance channels. In the UAE, we have worked with money transfer operator Hello Paisa, inclusive fintech RISE, and insurance powerhouse AXA to create simple and cost-effective ways to allow migrant workers to access insurance and redeem claims simply using their mobile phones. Thanks to the power of technology, we have been able to provide affordable and accessible insurance to migrant workers in the UAE and their families back home.
The stories we've just heard are only a few among the millions of migrants around the world, supporting families and entire economies back in their home countries. The UAE is one of the largest remittance sending countries in the world. Through meaningful partnerships such as these, we can work towards closing the protection gap and create accessible financial products to form an ecosystem that supports financial inclusion.
Thank you very much.
Thank you, Siani. All right, thanks a lot. First of all, apologies for the tech issues and apologies for less than desired experience with the tech issues, but that's life. That's how tech behaves. In the end, we all get where we want to go. So here we are. It's now time for the questions. Those questions you've been packing, I hope that we'll be able to respond to all of them. Time will be a little limited, but we will manage because I've negotiated for a little bit more time. So could I just see who wants to go first? Usually this is the hardest question. It's normally the first one. I see a hand there. I see a hand there, and I see a hand there. So those are three. Those are the brave ones. So you'll definitely get a chance to ask your questions. your hand came up first. But I want to start there. I'll start with the lady. Thank you.
Thank you. Those were very good presentations, quite an eye-opener. My question goes to Andrew and Kolala, that's the name. And I like what you said about using AI to settle claims. And my question is, have you witnessed any fraud in the process, paying claims, and how do you deal with it? Thank you.
Thank you very much. So the honest question, yes. I'll give you context. That's in terms of witnessing fraud. In Zambia, we launched on February the 21st or 24th, I think, 2020. We had around 2,000 signups in day one of new customers for our product, our flagship product. By, I think it was 4 p.m., we had around 50 attempts at gamifying or fraudulent claiming. We were very excited because it also gave us indication that there is value. I know everybody looks at the negatives of fraud and the like, but for us it was okay. So people actually see value in this thing, so it might actually gain traction, and it did. So where AI is concerned, and that's why I really wanted to show that video, but I'll try and explain it very quickly, just to give time to others to ask their questions. So our platforms basically leverage off of telco behavior. Our product, first and foremost, is linked to the usage of your mobile phone. One of our products basically is linked to the way you buy airtime or recharge for talk time in your phone through your network operator. And that is how you also acquire insurance. So it's trigger-based. So any behavior that departs from what you normally do with your mobile phone basically flags us or flags our technology to say, hey, this individual doesn't normally spend this amount of money on their data bundles, on their airtime. They could potentially be trying to ramp up cover and hence make a fraudulent claim. Our system will then flag you and then stop selling you cover, or you won't be able to purchase cover. So it will literally freeze your purchases. And then it will continue monitoring your behavior. So typically what we see when people do that, they will literally a day after or 2 days after then push in a claim. And then we say, aha, we have been expecting you, madam or sir. Thank you, but we cannot pay this claim. AI-wise again, it's embedded in the presentation, and I'm sure when it's circulated, please all of you take time to look at it. But the technology we have applied basically also allows us to scan and analyze documentation. So we've taught our technology or our platform to look for certain inconsistencies. Simple example, a hospital discharge slip with a signature of a doctor or administrator. We collect all that information from the institution. We upload it and teach our system how to analyze that. When you submit that document through WhatsApp, you take a picture. It comes straight into our system, and our robot, for lack of a better word, will look at it and analyze the signature and say, does this match the doctor for this hospital? And all this is done in seconds. So yes, we have tried, and AI is developing ways of mitigating fraud, but like a lot of people said, I think the other speaker said, it's not the silver bullet, but it's certainly helping enough, of course, helping us stem it. Thank you.
Thank you. That was the second hand, Ashok. Yeah.
Yeah, it's again to Arnold. You said you use, your technology and your cells and everything that you do is based on the mobile phone behavior. And the thing that we are now faced with, and we are all worried about, is how do we deal with data protection acts. So are you not really actually contravening the Data Protection Act and actually misusing the data that you're getting? And also, you sort of, there's a lot of times we are not allowed to transfer that data.
Okay.
Thank you. I've been anxiously waiting for that question, Ashok, and it's very timely. I think across Africa, across the world, data, and specifically data protection, is a very hot topic. From a regulatory perspective, and I think, let me begin by saying the main tenet of data protection, I think across any country, is basically consent. And what do I mean by consent? Customer consent. You basically cannot do anything without first the customer allowing you to. Do we agree there? So that's the foundation of data protection, and I think the most important one. So how do we utilize this foundation? From an IO perspective, even from engagement, the very first time you log into our USSD, you are prompted to give consent for us to access your KYC data as the telco has stored it. So it's consent-driven and customer-driven from the very get-go. At that particular point, we even go a step further to inform the potential customer that should they also consent to us, we will use the same data to actually fulfill our promise of paying a claim. One typical example, again, which we leverage off of to validate claims is cell phone tower location. So again, if you are hospitalized in hospital X in location Y, we will ping your phone data to see if you are actually in that area. When you sign up as well, you obviously provide a beneficiary or a caretaker in case of hospitalization and provide their number as well. By that, we'll also ping them and say, you said this is your spouse, sir, madam, and likely they were with you in hospital. We will access your record, phone records, to see if you were within that general location. But all this only happens at first engagement when the customer actually signs up for our policy. We actually have a second tier even at claim stage, where the customer is also reminded that by virtue of them making their claim, for us to fulfill it and fulfill it quickly, we will access some of the information that they have reposited with the telco. So long and short, it is a thorny issue, but I think where the customer allows you to, I think all is well and covered. Where protection itself of the data is concerned, one of the other issues is obviously the storage of the data. I think that is obviously still being debated. In a lot of African countries, there's the debate, and I think we'll talk about that. There's a debate between, is it cloud storage, which is basically outside of the jurisdiction of the state or the country where those laws apply, and or in-country in servers. We have a mix of both. Our parent company obviously has storage facilities that we leverage off of from an MTN perspective in country, but also some of the information within the regulatory law we do store in the cloud as well. So many aspects, but the good thing is that it's evolving with time, and I think it's one of those things that eventually will have a blueprint that obviously all players can apply to the benefit of the customer's safety.
Thank you. Thank you. There was a hand there, madam. Or has your question been answered? Yeah. Okay. All right. So we go to this other side. I'll go there, then I'll come to Lemi. Yes.
So most of the time, the measure of success that's being presented is around scale, right? So the number of people that you're trying to reach. I'll be really curious to hear from these organizations, what are you doing in terms of measuring impact? So have you been able to define the social problem that you're trying to solve? have you been able to then establish any kind of social indicators that you're looking at, and are you able to evaluate if your solution is actually helping in that regard?
I believe that's a question for all of you. Yes, there are the numbers, the millions of customers, but what about the impact, right? That includes social impact. Right, who'd like to take that? Jihan. Yeah.
I think one of the interesting things about just insurance as a product itself is that it's an impactful product in itself, right? So the coverage that it provides, the safety that it provides, the safety net that it provides, ultimately, I think in that aspect is providing substantial levels of impact. So say if you're able to reach 1 million, 2 million people, I think one of the key things, particularly in Africa, is people are heavily reliant on single sources of income. If they own trucks, if they own farms, if they own any asset, so they're heavily reliant on that as a source of income for them. So providing them with this safety net and protecting that component, I think, is really key. And I think, I'll let others talk about like the micro aspect, the micro insurance, but the fact that you're able to provide a product for us using technology, and you're able to split that product instead of it being something that's unattainable, you're making it so that, you can pay weekly, monthly, you're able to actually allow people to be able to be onboarded onto some of these products, I think is one of the key ways that we're able to provide impact. We are a company that's venture-backed by a lot of impact funds. So, for them also, it's not only about the reach, but also, how have you transformed a life, or how have you been able to reach somebody who was never able to access some of these products before. But yeah, I think I'll let you talk about the micro insurance, perhaps.
Thanks, Jan. Thanks, Dan. Yeah, 100%. So like from our end, one of the challenges that we picked up, right, is because we're a B2B provider, so we're quite detached from the end user, right? Although the end user is using the technology, but as a platform provider, we're quite detached. So what we've started doing now is, and because of that, we're so much dependent on the distribution, right? Because the distribution is closer to the end user. So what we've started doing now is, in collaboration with the distribution partner, is to have indicators to say, we want to be able to understand or to measure what impact the insurance solution is providing for the end user, right? Whether it's a health product or whatever product it is in the absence of that insurance product, what was the financial status, to try and get like the insight in terms of the financial well-being of that customer, and post the insurance is how is that insurance product, or when they experience a challenge and the insurance was in place, is how has that helped them to safeguard the finances. So that's 100%. That's something that we've now started measuring and putting in tools in place to say, how can we get a bit closer to our customers? How can we understand the insurance solutions that we're co-creating and we're delivering to customers, but what is that financial impact that we're actually delivering to the end user?
Okay, thank you. So you're going beyond the numbers to the real impact. Thank you. Now you have a question. All right, I was about to say that round passed, but I'll come back to you. I want to come to this other side. I see a hand from that gentleman. I don't know whether Lemmy will get to ask his question.
I think this one goes to all the gentlemen who are presented on TechSavvy. And one thing I wanted to know is what they are doing from technology perspective to manage the cost, because the cost of insurance is a major concern when it comes to distribution and penetration into the market. Secondly, is if you compare insurance and bank services, people say my bank, my doctor, and whatever. One of the reasons why that becomes the case is because for insurance solution, you only come in touch with your provider after 1 year, especially for the short-term insurance. But if you look at banking services, after every month or week, you are in the bank. It's only, I think, Andrew, the gentleman from, is it Zambia or, yeah, who mentioned that they actually write to their client after a month or so, why have you not claimed? So you keep in touch with your customer, and I think that is creating the touch with that is my insurer. They wrote to me last week or last month. So that is just a comment, but the question around cost management is critical.
Okay. Cost management. Allow me to direct that question. I'll give that question to Siani. How does technology help manage costs?
Yeah, it's a very good question. And I'll tell you what, every time we speak to potential insurers, halfway during the conversation, the first thing that they ask is, how much is it going to cost me? Right? It always comes up. Look, technology is not free, right? Somebody has to pay for it at the end of the day. But what we do is we always sit with a partner to say, let's look at your processes and let's look at the inefficiencies within the processes. Because you need to bring technology to address a problem, right? Because there's so many technology solutions out there. But you have to, you as an institution first need to understand where are your inefficiencies, and then bring in technology to solve those efficiencies. Yes, in the beginning, the spend is going to be like that, but we have seen it over time. It actually does that, and then it goes that way. The hurdle is to take that first step and actually invest in it. It's not a cost, it's actually an investment, but you will see that over time, you actually do get that return on it, because I kid you not, there's no way you're going to run an insurance program with 1 million customers using Excel. It just won't work.
Okay, thank you. I'm feeling conflicted because I have questions that must be answered, but I'm also constrained by time. So because there are 2 gentlemen there and 1 lady and no one on this other side except Lemmy. Lemmy can ask his question during the tea break, I believe. All right, okay. So if you could just make them really, really brief and the answers equally brief, that would help. So I'll start with the lady because this is the second time.
Okay, so this is a real question. It's actually building on the question that Dana asked about impact. We often think of measuring impact as being very expensive, and I wondered whether anyone in the room has considered using technology solutions for measuring impact that is customer-centric, rather than it being the one insurer that is, buying the impact study, or one distribution channel. We know that there are providers out there who've mainly been working in the microfinance space. And we know that the landscape data, it's measuring uptake, it's similar to measuring bank accounts, right? How many people have got a bank account, how many people have got an insurance product. It's necessary, but it's not a sufficient, it's part of the way, but not where we really want to end up. So my question to the room is in Kenya, in the Eastern and Southern African countries, I know ACRE Africa is doing this, for example, to measure impact on a regular basis, that is asking the customers about what difference has the insurance made to their lives. Is there interest in something like that? Is there interest in forming a consortium? Is this something that could work? Is the panel aware of any other examples of where this is being successfully and affordably deployed?
Okay. That's a question for all of us. So, all right. Elias has volunteered to talk on behalf of all of us.
So maybe just I need to refer you guys to what SIGAP has been doing. They've come up with what we call customer-based approaches, whereby they look at not only the financial value, but they go beyond financial value to non-financial value. So for instance, they've come up with the measures of experiential value. What does the customer experience? Because, when we talk about treating customers fairly, is not only by just how many claims have been paid, what is the experience. So there are some metrics that have been developed across the continent on what are these measures that can help us go beyond just numbers. So maybe if you check, there's a report that has been done by CGAP on customer-based outcomes that go beyond just issues like claims ratio and all those types of numbers to the experience. So they kind of now trying to even go beyond the metrics that we already know of. And I think maybe we can pick from that and maybe leverage on maybe what CGAP has already done to look at measures just beyond the financial value to the experiential value that they're currently talking about.
Thank you, Elias. I was hoping that those questions were the same as the one that has been answered. Okay. So.
Yeah, my comment is on affordability. For example, we are talking about inclusive insurance. We want to reach out to the people on the lower end of the radar. I'll give you an example. In Malawi, minimum wage is about $42. Now, you are coming with your solution. You're telling me that per month, when I onboard someone, you want $2. It means if I factor in my premium, I'm going to sell this product, for example, at $5 to $6. So someone who's receiving $46 can't afford that. So I think the best model that you should consider as providers, I would go for percentage of premium. That is going to work, and it has been a problem because I'm piloting a microhealth product. The biggest problem that I would face is how it's been charged. Now I'm forced to do it in-house. I'm using WhatsApp chatbot to onboard my clients because I'm running away from the cost because I want to sell my product maybe at $2 per month. Now you are coming, you want also $2. It's going to be $4. That is not going to work. Thank you.
Okay. Our time is up. Who wants to give a one-line answer to that? Volunteer? It's tough, but we have to stop, but that has to be responded to. Who talked about pricing?
So I think if you look at pricing, and basically you look at it from the actual value, okay, fine. I come from that particular field of actuaries, so ideally there are a couple of elements that do determine price of a product. There is no single model that will say that this will work and this will not work. I think the key thing is that how much benefit are we taking back to the customer? You know, most of the time we talk about the cost of technology and how you are going to price technology. It kind of becomes quite expensive for the initial element. And again, when you talk about inclusive insurance, then you talk about the law of large numbers. The more, the cheaper the product will be, the less then you would not be able to break even. So I think there are a number of models that could be advocated for, but clearly the game will be how many people will you be able to bring into the equation to basically subsidize the price that we are currently talking about when it comes to pricing some of these particular products.
Thank you, Elias, and thank you very, very much, ladies and gentlemen. For me, I just want to summarize by saying from Elias, we learned that innovators need help. Yes, they're good, but they need help. Jihan, I remember from your presentation that the partners ought to be ready. We are looking for partners, but partners must be ready. From Andrew, the most interesting thing I've heard today is that they actually go out and remind customers to make a claim. That's refreshing. And of course, from Siani, tech is good, but it's never a silver bullet. Thank you very, very much. Have a wonderful day.
Thank you, Jeremiah, and thank you, panelists. Very interesting conversations. That issue of the cost, and I dare throw in a spanner in the works, is cost really an issue? If the service is, if reliability is assured, is it really an issue? If I can be assured that it will happen as has been promised, is cost an issue? I'm hoping that the panelists in the last session will speak to this. And somebody talked about, I think it's Andrew. Is it Andrew? Or the gentleman who talked about, let's not call it insurance. We should be saying it's solutions and all that. And I asked myself, what is in a name? Really, what is in a name? Does it matter if you're calling it solutions and it still doesn't provide the solutions it's promising to do? Insurance, will it always remain insurance, or we have to camouflage it and coat it to look nice and fancy and sexy for people to buy? What's in a name? A rose by any other name remains a rose. We've seen, tried and tested. So as we go for our break, which is on the left, we can be thinking about what we want to hear and any questions again that we might be having for the next panelists. We are running a little late. I'll kindly ask that we take our tea. If we could make it quicker, the better. Maybe 20 minutes and we're back, so that we then be able to finish and catch up with the scheduled immersion visits. So karibuni sana kwenye chai. I said, welcome to tea. That is on my left. Thank you. Kindly can we take our seats? Kindly could we take our seats so that we get started? And so for this session, we are going to hear in terms of the summary of what has been discussed from Monday to today, some of the issues that have come up on the floor, and how the discussions have actually been. After that, I will then have a panel. We'll have a panel discussion. We'll be having Mr. Kalai Mse in the panel. We'll be having Mr. Gishui, represented by Hazel Kingori. We'll have Israel Mushena, and we'll have Elias Omondi representing the development space. So for now, I'm going to ask Dak Reinhard, to come and share with us a summary of really what it is we have been up to for the last 3 days. Welcome, Dak.
Yes, good morning, everyone. Could I please get my presentation up? Sorry, I had to take up this pill. I was sick last week. I was having a cold. My boss asked me to stay home. I said I can't stay home. I have to work for this conference. And it was good to do that. I really appreciated what you did. I want to thank IRA. I want to thank all people that were involved in this conference, including the tech team, including people who catered for us. It was a pleasure to be here, so let me start with that. So thanks, and I think you can applaud IRA and all the partners for putting this together. Let's see how that works. There we go. Let me start with some quotes. Godfrey said, efficiency is key to microinsurance. Oh, sorry, one step back. Nelson Korea, Nelson from CIC. Is Nelson still here? No. It's about fighting dehumanizing conditions. I want to leave something behind that made a difference in people's lives. So insurance has a role to play, keep that in mind. Derek said microinsurance has become the business that contributes most to the income of the company, of Pioneer in the Philippines. There's a business case. Is there a business case for microinsurance? Yes. Andrew, I hope I quote you correctly, partnerships are crucial for success. We are not trying to reinvent the wheel of a car. We just put fresh air in it. I really like that. And Elias said innovation is something where we may not see the results immediately. So we need to be patient, have a long-term plan. Mr. Kiptum. Efficiency is key to microinsurance. It's about the right product, right price, and settled as soon as possible within 24 hours. So great to see that. And Mr. Mabonga, insurance means securing the life of your loved ones. There is a need to sensitize people from a young age and develop a culture of savings and insurance to improve penetration. And from the National Treasury of Kenya, we heard the case for inclusive insurance and microinsurance is one that we need to deliberately pursue if we intend to increase the safety nets and the financial cushions of our people, of everyone in this country and in the region. I see people taking pictures of the slides. We aim at collecting all the slides of all the sessions and put that up on the conference website so that we can share that information. Feel free to take pictures, but we really want to make sure that all the information, all the content gets to you as soon as we can. Just some takeaways, and it's definitely not comprehensive. It's not discussed and approved by anyone else other than me. Rishi helped me to put this together. Thank you very much for that. We try to summarize that, having some key topics of the conference. Now about the regional focus, we heard about the landscape studies. 34 countries were surveyed. Only 8% of emerging consumers in those countries had insurance. In Eastern Southern Africa, the figure is 10%. The product mix is very different. In some countries, health plays a more important role, in some it's life, in some it's funeral. 24% of Kenyans are covered, of which 18% is covered by the National Health Insurance Fund, so there is a role for the industry to play to cover more people. The collected premiums in microinsurance only account for about 0.8% of the total premiums in the country. About leadership, we heard that we need leadership, we need ownership, we need CEOs, we need executives that really are behind the topic. We have seen some CEOs on this panel. You need their support. They have to have this long-term vision. As we heard, even in the technology, it takes time to innovate. So without that support, it would be really difficult. But there also must be ownership of the insurance industry of several schemes. We heard that in the AGRIC panel that I had the pleasure to facilitate. If the insurance companies are not owning the schemes, it will disappear. We will have nice pilots, nice brochures, nice annual reports. What have we done great? But after 3, 5, 10 years, it's gone. So that shouldn't happen. And there are multiple types of ownerships that are necessary. Product design. We're often targeting informal workers. We need to understand the needs of the people that we're targeting. Irregular income could be a problem. And there was one quote, think from the end. Think from what you want to achieve. Think from who you want to service, and then develop what you can offer. Feasibility studies should consider local risks that farmers face beyond only climate risks. There's more. Maybe farmers tell you, okay, health is the most predominant risk in my life. Maybe it's not in the first place agriculture. And also what I think is important, if we talk about people that have access to insurance, I always say, well, wait a minute. If I only have health insurance as a farmer, then my main risks are not covered. So to really cover my life, I need more than just one insurance policy. If I have accident, yeah. But what if I need to go to the hospital? The accident insurance doesn't pay that. So access to insurance doesn't necessarily mean the person, the family is really covered. Donor support can catalyze product development. But again, we think about the value chain, and we need to understand its impacts on the partners in that. Regulation. Now, clearly, regulation is key. We heard the examples how regulation triggered development in Kenya. We heard the examples from our friend from Egypt, how regulation was not there and was sort of like prohibiting the development. We talked about technology. Regulation has to improve technology. Regulation has to allow innovation, and regulation has to allow sandbox approaches. So governments and regulators play a crucial role. It's difficult to say who plays the most important role. I always say, if we don't have the industry, if we don't have the regulators, if we don't have the donors, if we don't have the actuaries, if just one piece of the puzzle is missing, we will fail, or we will be really slow. But the regulators are really like the spider in the web, where everyone has to go to and has lots of responsibility of really getting market development done. Technology, and I did not summarize the last one because it just happened. We heard about examples how technology can help community-based organizations. Digital tools can be used to expand microinsurance. In Kenya, we heard that 61% use smartphones, 45% use mobile money daily, so there's a huge opportunity to use. We heard about the Bima example in Ghana, how you can add services to insurance. I think that's crucial. If you don't have access to a doctor, you don't need insurance. Technology helps to improve data, to monitor the product, to service the client, so technology is key. And I think someone in the past panel just said, without the technology, there's no efficiency, That's true. I personally believe without being digital, we will have it really difficult to reach scale. But at the same time, as we have seen, always have a backup for technology. Lorenzo Charm, the chair of the board of the Microinsurance Network, once said, every digital solution always needs an offline backup. So digital can help you, but don't forget about the customer and don't forget about the human interaction. Now, what comes next? First of all, Pedro comes next, and he will speak about the IDF and the next steps. I hope really you take these learnings in this country. You keep on working on the key topics that you defined in the past conference that took place in September. I'm happy to come back here and see what happened in the next 2, 3, 4, 5 years. But you need to keep on sharing. You need to learn from others. You need to fail. You will fail at some point. You fail fast, start all over again. But you need to listen and share. I think that's one of the key things. And the role of us as the Munich Re Foundation is to provide a platform with partners. And the next platform we are going to organize together with the Microinsurance Network, together with the National Insurance Commission of Ghana and the Ghanaian Insurance Association and Brokers Association, is the International Conference on Inclusive Insurance. Happy to see all of you there in October. And also, each and every one of you can submit a proposal to the conference. If there's something you want to share, please submit a proposal. Just go to the website, inclusiveinsurance.org. Deadline for those is May 3rd, and I'm really looking forward to at least see some of you there. Again, thank you very much to all the people that are involved, to the speakers, to you who stayed here for 3 days. And I'm looking forward to see what's happening in Kenya in the next coming years. Thank you. Yes.
Thank you, Dak. Yes, Pedro, you are next. You can come up.
Thank you very much. Thank you, Dirk, for this very great summary. I didn't even bring any speaking notes. I want to be very brief. I would like to thank you all again for your warm welcome. I was just telling Lisa that I feel at home here in Kenya for many, many reasons. For those of you who don't know me, I'm from Brazil, and I feel very welcomed here, not only by your beautiful smiles, but some of the words Dr. Nelson said at the beginning of this conference really have been resonating with me throughout these days, and as I go around and experience the finer things that Kenya has to offer. To me, the next steps here would be to really activate this country task force that we've been suggesting based on the outputs from the workshop last year. I have to say, it's been very refreshing to listen to all the speakers throughout these days. I think it had been a while since I've been to a conference where I've learned so much. I think having a context and having a particular interest in the country has played a big role in that. But what I see is that the foundations have already been built by the market. I'm happy that we chose Kenya as a pilot country because we can really leverage what already exists here and create a blueprint for this coordinated approach that aims at scaling up the penetration of inclusive insurance. And I'm confident we can do that together. So we have many champions here. I'm looking at Anne, Elias. I think he wasn't here yesterday when I spoke, but I quoted him saying that when he came to the workshop, he said he expected that this wasn't going to be just another talk shop. So I think us being here today proves that that the conversation continues. So this is the ending of the conference, but I will be engaging with many of you in the next couple of weeks so that we can discuss the governance for this task force, maybe select a few champions for each work stream, and then really activate it so that we can start seeing a more enabling environment, and perhaps, hopefully, by the end of the year, some projects sponsored by the IDF and in partnership with IDF members, together with local players. Thank you so much again.
Thank you, Pedro, for being short and to the point. And at this juncture, we are going to get into our last panel discussion. I'm going to call upon Mr. Kalai Muse kindly to come to the stage. Kalai works at IRA, Senior Manager at Insurance Regulatory Authority. He dreams, speaks, walks insurance. And we call him, he's the head of our industrial area, where they're doing all the licensing and all matters pertaining to insurance. I would also like to call Elias to come up on stage. I told you yesterday, Elias is my personal person. I already taught him how to put on shoes and how to button his suit, and he's not disappointing us. We are proud of him. I would also like to call Hazel Kingori from Association of Kenya Insurers to come up to the stage. She's not just doing a gender balance on the stage, but she's got the content and is sure enough to throw the punches as they should come. I also would like to ask Israel Mushana to be coming up on stage all the way from Mozambique with love. Karibu sana to Kenya. And fortunately or unfortunately, I am going to be facilitating this session. So if I would kindly ask that you, Elias, you go to the other side. Thank you. So Kalai, I'll start with you being the host and being the regulator in this part of the world. Insurance has been, you say it is sold. It is not bought. And I'm thinking, or most of us think and believe that insurance speaks to the heart because it's a promise that you're giving. When you're talking about promises, it's matters of the heart. It's not matters of the head. The way insurance is sold in this country, microinsurance or the conventional insurance, are we speaking to the heart? Are we speaking to the head? Could that be the reason why we are where we are, or we are not where we would like to be? Thank you.
Thank you, Noella. You are giving a very interesting analogy to this issue of insurance, whether we are dealing with the head or is it the heart. I don't know, but I think you are right. Insurance is a critical issue, and if I was asked, it deals with the heart. And you could tell from the discussions during the conference, this issue of trust has kept on coming up. Every time there's a discussion, we do not have trust. Why? Maybe that explains the point, that probably we've been dealing with the head, and we never deal with the heart. So I think it's important from the discussions we've had. I think we need that. We need to talk. And you see, here we are talking about safety, the safety of people, risk management. It's basically talking about safety, ensuring people are safe, they can do their business without all these hindrances from the risks that surround them in their everyday life. Thank you.
And in that same line then, so what is your vision of inclusive insurance in Kenya and the region from a product mix perspective, access, and quality?
I think my vision is that inclusive insurance is the future of insurance. It is actually the future of insurance. We may not be there yet. Maybe like somebody was saying, we've not found the button yet. We are all fumbling looking for this button to press. Maybe we have not found it yet. But I think I can assure you, whoever will find that button first will move with everything. So I think I would encourage you, let's keep on looking for this treasure, because it's a treasure hidden somewhere, which we are trying to fumble to get to. Let's look for it. Whoever presses it, I can assure you, maybe in that case you come after 5 years, you may find we have found the button and things will be moving. Thank you.
Thank you, Kalai. What I hear is more like we are shooting. I think we will aim later, so we can continue to shoot, hoping that one person will hit the target, and we will both learn. We will all learn how to do that. I want to ask Hazel from Aki, what are the 3 things that the market players should avoid doing? And as you answer that, what are some of the 3 things, again, the quick 3 things from where you sit that the players would want the regulator to do to make this elusive thing that Kalai is talking about, that we can finally reach it?
Thank you very much, Noella, for those questions. I think I'll start with the do's and finish with the don'ts. In terms of the do's, one of the things, from sitting from the association perspective, one of the things we'd encourage our members to do, or rather the insurance industry as a whole to do, is customer-driven products, not sitting in our offices and crafting products, or, and this now goes to the don'ts, shrinking already existing conventional products and calling them microinsurance. That will not work. But if we have the customer at the center of it, we are crafting solutions, as was said earlier. We are crafting solutions that address the challenges that they face. I think this will be one of the ways we will be now no longer shooting in the dark, but we will actually know what it is we are providing solutions to, because we've understood the problem. The other thing is collaboration. Competition is good, but collaboration is better. Why do I say that? We've seen very good case studies here where you can't do it by yourself. You really have to expand your wings. You really have to involve other people. That way we will be able to reach, corners of this country that initially would be very difficult and very costly to get to. So let's look at ways of collaboration. And I'm glad the microinsurance regulations actually give us some sort of latitude, guided latitude, of course, to engage with not necessarily traditionally, people have to be regulated by the regulator. We can talk to everybody, and we are happy to see insurance companies now partnering with the taxi hailing apps. We see them partnering with the transportation sector. So those kinds of partnerships is what will give us the critical mass to expand and reach a wider audience. Thirdly, is on the issue of claims payment, because I think Andrew has really challenged us here today, where they remind people to claim, like, why aren't you claiming? Why aren't you experiencing insurance? Because that's the only way insurance can be experienced. As you said, Noella, it's a promise. I can't taste it, I can't see it, I can't touch it. So how else can I experience insurance other than when I claim it? So at that point, I think those are the 3 things that we would encourage. Give customers a good experience when they come to claim. In terms of and now for the regulator, the do's. One thing is be an enabler, less of the enforcement. There are laws and penalties that address that. Let's do more of enabling. Let's do more of stakeholder engagement, listening to what the industry has to say, and then aligning to that. And that way we will be able to, create an environment where the industry is able to look for solutions, expand its reach, expand its mandate. Then the other thing is, and I think Elias will touch on this, the issues of regulatory sandbox. This is very critical. That's the only way we will encourage innovation and at the same time protect consumers, because we have to have a balance. Innovation can work or it can flop, but it has to be done within a safety net, so that we don't harm the very same consumers that we're trying to get at the tail end. And then, stakeholder engagement, and I'm glad we have an open door policy in Mr. Kiptum's office. We are always able to reach him, and we're always able to have conversations with him. The don'ts, and I think I've already touched on this a little, is the issue of products that address consumer needs, not shrinking conventional products, but looking at the very specific market that we want to address and giving them solutions for that, and the issue of claims. So, yeah.
Thank you. And on the issue of claims payment, the previous panelists, one of them said that claims payment is at the heart of microinsurance. And then we also asked ourselves, is technology the silver bullet, that will make us get to where we want to get? We've also spoken about the consumer journey, not making it complicated. It should be easy to go. Then the customer focus, we're talking about the pain points or the happy points. I didn't hear about that. But right now, we are seeing organizations moving towards what they call customer obsession. That organizations should strive to be obsessed, to almost think, what will the customer want? And to offer that solution before the customer is even asking for it. I want to ask Israel Mshena, you are in the business of offering solutions. What is the customer journey like? What's the experience that you have seen? What are customers looking for? Can customers ever be satisfied? Are we chasing a mirage? Is there a hope that we can actually get to a point and say, well, the customers now, insurance customers, we can use this model to really make them happy and to get what they want? Israel?
Thank you for that question. The question you've raised goes to the heart, I think, of a point that was coming from Siani when he said the biggest challenge for insurance is that we are only there to provide our service when something bad happens. And he spoke about tangibility as one of the solutions to help in addressing this fundamental challenge of the concept of insurance. And the representative from IO also spoke very well about some of the things that they are doing about making customers aware of their rights in terms of claims and following up with them. And maybe I can actually give you an expression or a philosophy that I've seen from one of the competitors of our group in South Africa, that instead of calling themselves insurance, and you said a rose is a rose, despite what you may call it, this specific company, instead of calling themselves an insurer, they decided to call themselves outsurer. And the reason was that they realized that the fundamental problem of insurance is that if Omondi is a good driver, he doesn't have accidents, he will not see the benefits of insurance. If Mr. Muchena is a bad driver, gets involved in accidents, he will see the benefit of insurance. So why are you expecting Mr. Omondi, the good driver, to subscribe and to support insurance, in addition to the issues of trust that our representative from IRI mentioned? And what they then do, which I think is a beautiful philosophy, they say, come to us, we reward the good clients. And their entire philosophy is about saying, if Omondi insures with us and Omondi doesn't have claims, we will reward the good client. And for us in Mozambique, in our exploration of agricultural insurance, we also say to ourselves, how can we learn from this insight? Because it's a critical philosophical insight from outsurance, and the solutions to it have to be fundamental. And what we have realized is that, yes, we are happy with the technology that we have for monitoring of climatic risks. And yes, Dirk, you're right, that besides climatic risks, the farmer is affected by many other risks. And we are on that journey to try and understand how we can address all the risks to which the farmers are exposed. And obviously, insurance will not resolve all the challenges that farmers face. So we are satisfied with the technology where we are, and we look forward to exploring ideas such as what is happening with FISP in Zambia around area yield. In terms of onboarding of the customers, we are also exploring some of the technology as was presented by Democrats and IO in order to make sure that the customer experience from the beginning to the end is digital. Because at this stage, we have brought this high-end technology, remote satellite sensing, but the onboarding process is manual. When there is a claim, the payment process is also manual. So at this stage, we are currently exploring prospects of moving towards the end that Kenya has, which is a digital experience from the beginning at onboarding all the way to the end at claim settlement, because we believe that that will improve the customer experience. In terms of satisfaction, once again, and I remember having this discussion with the World Food Programme when they initiated their project in Mozambique, and somebody kept on saying, let's measure customer satisfaction. I said, hold on, we just need to be careful about this, because what are we talking about in terms of satisfaction? But then, just like you heard from Duncan, and he spoke eloquently about their initiatives under the R4, they gave me a chance to understand risk. And I believe, and what I'm going to say here, I say it without hesitation, knowing that I'm in a college of insurance. I believe that literature in insurance should actually be altered to take into account the new thinking from the World Food Programme around risk management. So when Duncan said R4, what didn't happen, and I invite you to get a chance to read literature on it, was for him to explain the 4 steps of risk, or why they call it R4. And the first step being what they call risk reduction. They're actually saying, before trying to transfer risk, what should you, the farmer, be doing in order to improve the conditions of your risk? Because when we are insuring motor, and I'm just talking about things that insurers are used to, if you come to insure with me and you have not put an alarm, and you have not put a tracker, and you're not wearing a seat belt, and you don't have a license, I will refuse to insure you. So the same applies when we look at agriculture. What should the agricultural sector be doing in order to improve physical measures, in order to improve the conditions of their farming activities? And one of the lessons that we've learned in this specific area is the concept of conservation agriculture, where some of the development agencies and some of the people that are involved in agriculture are saying, when we have these low frequency, high frequency, low severity cases, let's not just look for budgeting financial transfer solutions, because it just becomes expensive. What should we be doing so that with the little rain that happens in the event of a dry spell, the farmer doesn't end up losing all their production? And once again, there is a lot of literature around the things that should be done to deal with high frequency, low severity. And when I say high frequency, low severity, it's exactly the presentation that Sylvia from ZEPRI was presenting. And obviously Sylvia was focusing on the financial risk management. But what I believe WFP does and supplements what Sylvia was talking about is to say, besides financial transfer, before you try to transfer the risk, with the risk yourself, before you even talk about insurance and going to insurance or whatever mechanism of risk mitigation you may be considering, what are you doing to reduce the impact of risk on your farming activities. Obviously, I'm speaking about the first R. I have limited time. I will not be able to go into risk transfer, risk saving, and prudent risk taking, which is their fourth element. They're also saying risk is not completely a bad thing. If you also don't take risk, if you don't participate in activities that generate income, you're also not going to do well. So I invite you all to have a look at the WFP literature with the 4 steps of risk, what they call R4. I believe that it's an absolutely critical supplement to the whole concept of risk management as presented by ZEPRI. Thank you.
Thank you, Israel. And I will ask your immediate neighbor, having come from the regulator and now is in the development space. First, what is your vision of inclusive insurance with regards to product mix, access, and quality? And is price a factor? If the service does what it's supposed to do, as promised, is price really a factor? Why are people buying shoes worth 100,000 shillings, you know? Or why for Kenyans, for instance, we have a service provider, telco, one that we say is very expensive, but has the highest number of subscribers. Is price really a cost? And as you answer that, I'd also want to ask you, based on the insights and lessons from this conference, how best do you think the development agencies like FSD Africa can support the inclusive insurance agenda? Thank you.
Right. Thanks. Maybe I'll just start from the last question. And the key thing that we need to ask ourselves is that do we really believe in inclusive insurance? From various components. So for instance, if you talk to insurance executives, is it a talk or is it something that they can really invest in? Now, if you look at the inclusive insurance, particularly coming from development agency, that particular term has been left to the development agencies to deal with. So you get into any institution that is looking at doing inclusive insurance, the first thing that they're going to ask you, how much support are we going to get from the development agency for us to basically look at this particular strategy? And that basically does not really kind of get us to the last mile where inclusive insurance needs to be. And that's why for such conferences, I think we need to start asking ourselves, what are we going to commit from each and every stakeholder? So if it's an insurance industry or an insurance company, what budgeting are we going to put that we will be able to come back within the next conference and say, this is where we have kind of moved on as an insurance company. From the development agency perspective, what are we going to kind of complement within the strategies of the insurance companies and other partners, basically committing within the inclusive insurance space? Because it's a term that we've talked about for the longest time possible. I think maybe it might mutate and maybe be called something else before this continent does anything about it. I know previously we used to call it microinsurance, and it was a great thing. We thought that we needed to bring regulations into place. We needed to kind of bring all the players into the space. But I think the key element is we need to start investing within this particular topic. And without investment, then we'll still be having a term that we'll be talking about for the next couple of years. So I think we just need to start bringing commitments. So maybe from the regulator perspective, what do we really need to do to create an enabling environment? And what are these action points that a regulator will be able to put in place to attract the players? From the players' perspective, what kind of investment should we bring in? And from the development agency perspective, how then do we catalyze that to ensure that these people that are currently underserved and not protected are going to be protected? We know from us as FSD Africa, we look at creating future for the people that are currently underserved or maybe not completely served. So within that, I think investment is critical. Enabling environment is critical, but also bringing in all the players together towards the common goal that inclusive insurance is not whereby we are going to see results immediately. So if it's looking for profits, we are not going to get profits year one. when we are talking about inclusive insurance, something that will take time, and we just need to commit time. So maybe from a development management perspective, we might de-risk that element of not getting profits the first year, and then companies can come in, because the key thing is that we need to provide value to the institutions. You also asked an issue of price. Is really price a factor? I think the way we are looking at inclusive insurance is completely the same the way we look at conventional insurance. And that's where everything never works. So if you are going to price these particular products, having the same analogy of pricing a conventional product, then you'll come up with products that, one, might not be flexible enough, because you are basically going to insure some people that might not have regular premium payments. Now, if you're going to price that with a regular premium payment, it will not kind of fit the purpose. Some of the premiums might even be paid after the risk has happened, right? So how then do we kind of bring in these, I would say, a very, a product that is quite versatile in terms of the way the customer are looking at it, how then do we price it? If you look at the price of technology, we say that it is expensive, because if you look at both ends, the technology provider wants to make a profit, the insurance company wants to make a profit, the customer is left to suffer. Because at the end of the day, the price of benefit that you're going to give that customer might not be commensurate to the premium that he's going to pay. Because at that time, then you load for technology, you're going to load for the management expenses, you're going also to load for the profit that you need as a company, and also the profit that the technology provider requires. So what is the element there? The benefit will be so small that the customer will not see the value of basically buying this particular product. So there's need to totally rethink or imagine how pricing is going to be done. Inclusive insurance is not whereby you are going to make profits on the first year. It's more like creating what we call an intellectual property. If you look at how intellectual properties have kind of evolved over time, the likes of Facebook, the likes of Google, they did not make money on year one. And that is our intellectual property from the insurance perspective, is inclusive insurance. When we hit that and we get that right, Mr. Kale talked about the button, we are still looking for that button. That button has to be done through the test and learn. And once we hit this inclusive insurance space, whereby the government will be committed around it. If you look at the government spending, particularly on government disaster, on natural disasters, it is quite huge. We are talking about insurance penetration below 3%. If you look at the GDP contribution that the government basically puts on natural disasters, which should be basically de-risked through insurance, is quite huge. So there's need to realign even government budgeting that might really make us get to this IP that we are talking about, inclusive insurance. So just to end, we need to invest in the inclusive insurance space. We need to change our conventional thinking on how we are doing our pricing, but also we need commitment. And those commitments will mean that we put our mouth where our money is. The key thing is that we've been putting our mouth so many years back in conferences and in meetings, but now we need money within the inclusive insurance space.
Thank you. And you're really throwing a spanner into the works. You know, when you talk about when they come and the first thing is like, what can you do for us to advance this inclusive insurance agenda without them having to invest in this? And I note that the development agencies in the insurance landscape have not been there for very many years. So it's a recent development that, of course, is welcome. But when you talk about the name mutating from microinsurance to inclusive insurance, and again, it might get into something else. Are we chasing a mirage? Are we chasing a mirage? Is it a shadow that we are chasing? I mean, the names are mutating from microinsurance, as you said, to inclusive insurance, to I don't know what next. Will we get there? Is it a shadow we are chasing?
Not really. I think there's...
Is there hope?
There's hope.
Nice.
Because already we are seeing signs of an industry that starts believing within the space. And this is the reason. If you look at conventional insurance and what currently the risk mechanisms are, technology is really providing a great mitigant. So, for instance, if you are insuring an industry or a company last 5 years, the types of technologies that those particular companies are putting in place basically means that they need to reduce their insurance cover, because already technology is going very fast. You can basically install all risk mitigants within your setting. So it means that as we kind of shrink around what conventionally we are known for, we might need now to get into this space of the people that might not really have any form of mitigation, and that we really need to support them. So I think there's hope that already we are having these discussions. Already there are organizations that are committed to do and to work on inclusive insurance. The next thing is that we just need to put money.
Thank you. You talked about putting money, and I know Kalai has put money somewhere with regards to innovation, and you talk about last mile. I know some time back the regulator was training insurance agents across the country just to enhance success and to enhance the reach. So, Mr. Kalai, what should regulators do differently? What is IRA trying to do differently to stimulate and support the development of the insurance markets? Thank you.
Thank you, Noela. You know, Noela, if you had asked me the question you have asked earlier, before the presentation by Jerick, I would have said yes, it's a mirage.
But now?
But now, I think at least we have some answer over years somewhere, because Jerick was able to confirm to us that there is actually a business case. And he did that very well. A few things, so now we can do things differently to achieve that. If you remember very well, he said we must have a long-term view. If the aim is to get profit now, then we are not in it. That can't work. Number two, he talked of independence and autonomy, if you picked. And I remember the way he put it very well, that when they started, the issue was we don't want anybody who has ever heard of insurance. That's how he put it. We don't want people who have heard about insurance. Let's get new people. Let's get moving. Because our conventional insurance thinking keeps on pulling us back. And I've had it many times. I remember even the time we were doing our regulations, when we said claims should be paid within 10 days, which is what is in our regulations, there was an uproar in the room. And the uproar was, that's not practical. That can't work. Now you heard how they do it. In 24 hours, claims are paid. So I think those are key learning points. Of course, including partnerships, probably as a regulator, that's where we come in. Because as a regulator, we must provide an enabling environment for people to do business. This is a new thing. So probably it has never been done, so there is actually no regulation for it. Because with innovation, new things, people come to new things which are not regulated. They are not in regulation. They were not contemplated anywhere. So as a regulator, what do we do about it? And my view is we should be accommodative, facilitative. Initiatives like Bima Lab give opportunities for people to test these ideas so that we can see how it works. There's nothing wrong with the regulations following innovation. Ideally, that's okay. That's what happens. So it's important for the regulators to look at it and ensure that they don't stifle innovation just because we must comply with the regulations. We need to provide that environment. Of course, not forgetting the issue of awareness. For the regulators who have a mandate for development, I think the issue of awareness is very key, which both for the regulators and even the players, we need to actively participate in this and ensure people understand what inclusive insurance is. Thank you.
Thank you, Kalai. And you talked about awareness, and I want to pass this to Hazel. And you've also spoken about claims, talking about 10 days and some talking about 24 days being the best turnaround time. And I would want to know from Hazel, I know that at IRA, there's sleep that is lost over delayed settlement of claims. And it's a big issue. We ask Kalai all the time, why are they not paying claims as they should? I'm curious to know, at the association, is sleep lost because your players are not paying claims on time? On the issue of awareness, are there discussions about educating consumers, not just marketing the products? And someone once told me, you see, when we see marketing of insurance products, we see this girl that looks very beautiful, doesn't have a pimple on her face, posing on a car that is very sleek. That's what insurance looks like. Is that really what it looks like? So what about the education initiatives from the players and the claims payment? Do you people lose sleep about that? Do you talk about that in your meetings?
Yeah, I'll start with the awareness element and then speak to how claims non-payment affects it. In terms of awareness, that's also one of the mandates that we have, and very similar to IRA, our role is to educate, not market. We really have to have a distinction. We are not marketing particular products, but we are educating consumers from the beginning of, number one, what is insurance? How does insurance work? Because that element of pooling and, that whole concept of insurance is it's not understood. So we start from the very basics of what is insurance, how does it work, where do you go if you have a challenge, what kind of products are in the market. We talk about life insurance and break it down, educating, like there is term insurance, there's whole life insurance, all those things, not telling people that we have product A, you should take it and you will pay X, Y, Z in this. No, just education. And I think collaboratively, like we've done quite a lot as an industry. IRA has done its part, ACI has done its part. Members are also doing their part in the various, insurance companies are also doing their part. On the element of claim settlement, yes, it makes us lose sleep because we've done so much work doing education. This is how insurance works, this is where you get it, these are the products. But the point of which they taste the product that is insurance, then it becomes a challenge. So how do we try and handle this at the association? Continuous conversations. What are the issues? So even before some of those consumer complaints get to you, we usually try and address them at the association level. Talking to members like, hey, let's do this. This is a clear claim. Let's just settle this so that we can also give consumers a very good experience. But I think we all just need to be very bold in terms of let's not be afraid to pay claims. Of course, the element of fraud should be dealt with because again, it will be a wasted effort if we're going to pay 100% claims. But let's give consumers a better experience, and we are likely to see a growth of our bottom lines because we will have more people coming on board.
Thank you, Hazel. And before I get questions from the floor, a quick response from you, Israel. What should market players like yourselves do differently? What should you do differently? Just to build trust, to make people see what you are offering for what it is, to believe in it. What should market players do differently?
Excellent question, and I don't know if I'll have the right answers for you because I think it's a challenge that we all have to deal with. What I really enjoyed, and it kind of speaks to our philosophy, was from the presentation of Ayo, where there is a transfer of, there is a reduction of the monopoly of the insurer that tends in traditional insurance to have a monopoly of deciding what happens next. So when you insure a motor vehicle, The insurer is both a player, they've received your money, they stand to gain by rejecting your claim, and then when you give them the claim, they are also the judge that then says, or referee that says, no, not covered, and it is in their interest to say it's not covered. So one of the things that I believe has happened, and I'm aware that the traditional insurance markets are not comfortable with it, is that many of these new paradigms that we're exploring, like index-based insurance and area yield, they represent